This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
My name is Monte Moore with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and My Mortgage Team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com.
Monty.
Carey Ann.
Jason.
Carey Ann.
Bringing it back. Hey.
Hey.
It's a good day.
It's a great day.
So glad you guys are with us today.
Great day in the Nashville real estate market, isn't it?
I mean,
especially if you like pain and suffering.
I don't know, but this year is flying by, and is it because we're like thinking it's going to get better next month? And I don't know. We're just keep,
I don't know. I mean,
focusing on
it's already April almost. It's just unbelievable. Hey, before we get, I'm really looking forward to our topic today because you were sharing on the huddle call Monday morning some new programs here that I can't imagine being in your business, I guess, any more than our own, I guess, as far as learning how to pivot. But the mortgage industry, I think, may be, a more challenging one to pivot than anything else I've ever seen. But Jason, you might enjoy this. HouseWire shared some interesting stats here. I just want to share for a second. Again, there's no judgment behind any of this. It says we can debate how much a company's stock prices matter, but the total lack of investor confidence in real estate brokerages, iBuyers, and listing websites of late is pretty astounding. Some lowlights with the most recent numbers from Friday are Redfin stock down from $72 a share a year ago to $21.
A lot of red on the screen.
And again, there's no judgment here. I'm just repeating what an analyst has shared in, again, HouseWire. Open Door stock traded from $28 a share a year ago down to $9.
Yep.
Interesting. Zillow has also been a stock free fall from $135 a year ago to $55 today. And Compass began a publicly traded company at the start of April last year with a share of stock selling at $20. Today is worth less than $7.
Yeah, that was that one. They even reduced the value before they went public, and they have still yet to get back to where they went to public offering.
Huh. Interesting.
Here's another one. EXP, the brokerage shares have gone from $51 a share a year ago to $26 today. I just think iBuyer's offer pads. What's interesting is when these companies say that the revenue is up, but we lost, $100 million, a quarter or whatever the numbers are. I don't understand how you can say revenue's up. We're bringing more in, but there's more going out the back door. Is that how that works?
Yeah, apparently. I mean, they're following what the government does, I guess.
Oh, there you go. There's an example.
It's the governmental mathematics.
iBuyer's OfferPad stock debuted September for $10 a share before sinking and now is less than $5 a share.
I think it's around 4. It was less than 4 when I last saw it.
So anyway, going public helped companies like Redfin, Open Door, and Compass raise a significant, though perhaps non-transformative amount of money, but now it puts them in a public crosshairs where reporters like myself can authoritatively write they are losing money, and any member of the public can track their declining stock price and any decisions they make. Anyway, it goes on, but just I think that's interesting to see what's going on in the world of real estate companies that have gone public. Thank God that Realty One Group is not public, I guess. I don't know. I mean, all we're doing is growing, fastest growing real estate franchise in the nation. But you didn't come here to hear about that, did you, Carey?
I think interesting enough, I mean, we can go in more detail, but, each one of you are the CEO of your own business within a business, right? And so you look at you being profitable. I'm just asking, just do we care that the other's not? I don't know.
No, just observation.
Because I just want to make sure, underneath my umbrella, I guess I want the umbrella to still be sitting there, right?
Well,
so
when
if
it
goes under.
honestly, when it comes to the tech companies who have come to town and taken a portion of the real estate agent, the local real estate agent's pie share, that matters, I think. And not that they're not local agents now working for those entities, but let's say they're turning the industry upside down, and in some cases, it's our own fault. Okay, I don't blame anybody else except, and I'm not talking about the newer agents. I'm talking about 25. Maybe 30 years ago, outside of a class that I had been teaching, I stood outside and said to everybody around there that if we fail as an industry to not raise the bar higher than what it is right now, if we continue to allow the consumer to have a bad experience and feel like they overpaid for that bad experience, they're going to find a new way to sell real estate. And then that's truly, I think that's the result of that, is when these iBuyers are looking at pain points that we have in the industry have failed to take care of, then they, here they come with certainty. As an example, Open Door offers certainty. Redfin offers bottom line, and all those kind of things. So
Zillow used to offer certainty.
Yeah, they used to offer certainty. That's a good point. They used to offer certainty. Now they offer another experience. So we'll leave it there.
Yeah.
Carey Ann, let's talk about the mortgage changes. What's going on. You shared some things that sounded really interesting on yesterday's call that I wanted to delve deeper into.
Sure. I love that. So, being very successful like you are in real estate for mortgages, you always have to be on your tippy toes and be able to tippy toes.
It helps when you're 6'6".
But you making sure that we can help as many families. So the goal is, and I saw a quote today, which actually made my heart smile, where I was thinking cash was truly king, and you feel like clearly it is, but you feel like every transaction is winning because of cash. Saw a quote that 25% of our local area is only cash, which means 75%, is financing, which is great. So my job is to offer as many different financing options for all real estate agents out there to open as many doors as possible. And you and I know within our local community, we have such a diverse community, which means we help so many different cultures. We help so many different families. Everybody has a different story. Some have high credit scores, some have low credit scores, some had a ding in their past, some people are brand new at a new job, so you have so many different scenarios. We've got medical professionals, we've got everything from here to there, so we want to be able to open the door. So just a kind of quick education.
That's why first of all, I'm sorry for interrupting.
No, you're good.
I think that's why I believe that an algorithm will never replace you, and it'll never replace you, and it'll never replace me, because we're always trying to bring our best to the party. There's too many variables for an algorithm to take care of. Yeah,
and I think if you and I were sitting around a brainstorming session for masterminding on how to be the best of the best, is just really always studying your craft, really being good, and finding something new and different. Like yesterday, I spent 2 hours after hours on the phone trying to build out a new program, right? That I think will make you shine out there in the marketplace. That'll make you shine out there even more in the marketplace, right? But that takes me sitting down and not being afraid to insert myself in the conversation and ask. The worst case somebody ever will say is no to me, and that's okay. So it does take people that are a little riskier to step out there and try to demand some new products, to demand different things to help other families, and assist all. So
with the mindset that what got you here isn't going to get you there.
Yeah, absolutely. I'm already thinking, if this is where our world is going, what is next year going to look like? And if I've got a plan that is a 15-year plan, I've got to make sure that I'm ready and well versed all the way through. So there's two types of loans. There's a conforming loan and there's a non-conforming loan. A conforming loan is the loan that is sold to the agency. So that's going to be your FHA, your conventional, your USDA, your VA type of loan, right? So your non-conforming loan is kind of when we go off-road. Think of yourself, you're driving down 65 and then you take, a back road here, Franklin Road, let's just say, to get to the same location. Sometimes it's a little bumpier. You got some stops and things like that. You get there, but it's a little slower. So that's going to be more of your non-conforming loan. And it's going to usually ask less questions. And we like those, right? Just know that when you do a non-conforming loan as real estate agents, it may take a little extra time to close those. You may have some things that pop up that are not the norm because it's a non-conforming loan, right? So that's something to make sure you know of. Normally on a conforming loan, there's a down payment, right? And those range from 3% on normally. And so right now we just rolled out something that's super cool. It's something different. Now there's many banks and lending corporations that are out there that have many different products. Some of those are portfolio to the specific bank. Some of those are nationwide, right? Just depends upon what you're looking at. And everybody wants to help the affordable buyer as well. So you're going to see different products associated with your first-time home buyers, your low to medium income, buyers, and all the way up, right? So that's important to know. But on Friday, we rolled out something called our Wealth Builder product, and it's 100% financing. Now, normally you think 100% financing is definitely not building my wealth. Like, I have no money. The intention of that is to
unless you bought in the last year,
yeah,
and you doubled your money,
right? And you've held on for just
but you
long
can't
enough.
count on that,
Right? Exactly. But the point of this product, which is kind of unique and different, it doesn't require you to do 100%. Based upon your income level. Now, a lot of those 100% is you have to have your income level under a certain dollar figure, right? So it's more of an affordable. This allows you, or this product is looking for that buyer who has money to put down. But the wiser choice is to take those funds and utilize it towards paying a 15-year mortgage or a lower term mortgage, so we can help you pay that mortgage off in a timelier fashion, and or use those funds right now to think a little bit outside the box and use that as your appraisal gap money, right? And so it's helping a lot of families think differently. Because I'm hearing a lot of, I wish I could use those funds for something else that would be great. So the intention of the product initially was for you to have the extra money to pay it off in 15 years. Use the funds for the down payment and utilize that towards the extra funds that you would have to increase your monthly payment. Now, a 30-year payment is usually a wiser choice just for the just in case. But if you took your normal 3 to 5% and you average that over, you would have the funds to cover yourself for a very long period of time. And again, the average buyer usually still stays in their house. How long do you think?
7 years.
So if you think about that, right, you still have a game plan for that first 7 years, with your normal down payment. Another family called me this past weekend and wanted to use those funds. That opened up their door around $35,000 to play with. And that was going to help them in their situation do an appraisal gap, up to that $35,000.
But doesn't that appraisal have to, okay, so instead of, wow, this is mind-boggling.
Well, so let's
cool.
just say the house
cool.
didn't appraise, right? And there was a gap up to, in his situation, 35. He had that wiggle room now because he did 100%.
Yeah.
Now, that buyer did qualify for a 20-year term, was comfortable with everything that came with that particular product. So in his case, a lot of the buyers don't have that ability, if they make great income, to do 100% financing. It just doesn't match up, right? Normally, it's only given to the more affordable or medium income, clientele. So this client was perfectly fit within this Wealth Builder product, which allowed 100% financing. It allowed for that 20-year term, but gave him the extra cash to go towards the appraisal gap window.
So let's say the home is purchased at $500,000. And they're willing to pay $550.
Sure.
And with 10% down.
There's a 50.
And there's a $50,000 gap. So instead of having to pay that plus the gap, the down pay stroke on the 500 plus the gap, the lender's looking at this as their 10% in at the gross price of $550.
Meaning they're going to do 100% up to the appraisal amount, and then that extra money that they had, which was in our situation, the $50,000, can go towards the appraisal gap.
That's incredible.
Yeah, so it's just opening up more doors.
Yeah, it helps them win the offer.
Yeah. And so that was kind of a byproduct of the product,
Do they have to go in asking for that program, or can they convert to that program?
Yes, this is a conventional type of loan, but again, it is a non-conforming loan, right? So it's not your normal, type of loan.
Rate's going to be a little bit higher.
Yeah, when you ask less questions, you do more unique things. Usually, the rate is a little bit higher. But again, people are not. We take the interest rate away. We focus on the need. We focus on solving the problem at hand. To know that this buyer, and many buyers, lost 10 properties or whatever. And this now is a little bit of a, maybe I have now a chance because I had no chance before, right? So that's a
I think
win.
the way you look at this, Carey Ann, and you have already done this, I'm sure, is let's say that interest rate is, I don't know the difference, a half a point quarter, whatever the difference is. It's not. It probably would never use up the $50,000 bump if you're coming out of cash that amount of money. You're still coming out ahead by raising the rate a little bit and then using that gap as the down payment money.
Yeah, and actually, if you really are in comparison, the rate's not that high or in comparison on this particular product. Okay. When you look at a bank statement loan for your self-employed, when you look at a no-doc loan, for your investors, when you start asking less questions, sometimes that particular, rate is going to jump up a little bit more. Yeah. Another product which we're really excited to roll out is our 1-year tax return product. So the buyer has to be self-employed for 2 years. Now, Fannie does allow for 1-year tax returns, but you have to roll the dice and hope that Fannie says you can accept the 1 year. This truly now is a 1-year tax return option. Wow. What's super cool about this program is you say, well, my tax returns, I actually don't want to provide them or I haven't yet provided them or prepared them. You, in lieu of a tax return, you actually can use an audited P&L, which that is amazing. So you would work with your CPA, they would review your income and your expenses, and they would audit that P&L, and we can use that in lieu of the 1-year tax return. And that has some flexibility on the credit scores and things. Again, that's going to open some doors for a lot of families as well that are out there. Those folks that possibly don't have a W-2, they have a W-7, which is a tax ID number. They are truly paying their taxes. There was only a few options out there in the marketplace to help that particular client. Now we're opening that door and really improving that in a way that it is helping more buyers, move in a forward direction there. Our Islamic community, we've got, that culture.
That one blew my mind, that you are also able to do this. I mean, that's incredible.
Yeah.
I've never heard anybody else other than that particular one company basically able to take care of that.
Sure. And, this was created based upon me just asking. Wow. Is there a way that we can help this community? So different communities have different needs and wants due to religious backgrounds and different things. And so the Islamic community is not able, due to religion, to pay interest on their money. So a lot of those family members have their funds in a certain location that's not creating interest, right? And so, or even pay interest, excuse me, I think it's both, pay and receive. And so there's a program that we have that allows a no interest program. And again, it is a very unique program, and many of the folks are very familiar with that, but there's usually only one option, and you know what that means. When there's really one option, whatever they say goes. It's really important to have multiple options to give them the most competitive scenario possible. And we're opening that door as well for those families. And so there's a lot of goodness coming down the pipe,
That's incredible. I mean, it's really incredible. I still am back on that scenario where somebody is paying their downstroke on that $500,000 deal, which is however much money, and let's say $50,000 on 10%, and that property goes up. They bid up to $550,000, only it appraises at $500,000. In the past, they had to come up with $100,000, and now all they have to come up is $50,000.
Right, if they choose to go with this route. Particular program.
Which again, I want to stress, guys, if you look at the value of that $50,000 versus that they're willing to come out of pocket theoretically, even if they have that money, this makes more sense because the difference between that interest rate over the next 7 years or 20 years or whatever is never going to probably reach that $50,000 mark in savings by going with that lower rate.
Yeah, cash is king. I mean, if you put $1,000 down, it only changes your payment, not by very much, right? And so keeping your money close is really key. Every time I look to do something, I'd rather put less money down and have more flexibility to pay off the loan in a quicker fashion because interest compounds and you end up paying so much more interest over the long term. So this is the goal, is to create wealth through getting that paid off as quickly as possible. One of our leading programs that CMG started with so many years ago back in the 80s is our all-in-one product, and to get the word out there even more, that's a first lien equity line that's attached to a bank account or checking account. And so you're familiar with this. We talked in a previous.
We just signed up for it.
Yeah, it's a sweep account. So every time, and it only works really well for those folks that have the extra money laying around, right? So a real estate agent, sometimes it works favorably if you have a lot of closings that are happening and you have this extra cash sitting in your bank account. What is it doing there, right? If you have it in a savings, it's maybe making you a couple extra dollars, but it's really not making you that much money. How cool would it be if that money was swept over to pay down your principal on your mortgage and then you focused on paying interest? That's a huge win, and that's opening the doors and paying off liens so much faster. 5 to 7 years is what they estimate folks to be able to pay their mortgage off, and that's called our all-in-one product. I'm kind of rebranding it internally because all-in-one doesn't really make sense, but I'm calling it Mortgage No More.
I'm excited about it.
And it's kind of a cool thing. So love to share more about that if you guys, are interested in learning.
I'm excited about it.
The other thing that we offer for a lot of our real estate agents that many folks are not, new construction is the way to go, right? A little marketing idea, search it out. It is coming. Just know when it is coming and already be prepared with the buyer to know, right? Because that's your inventory. I mean, so be friends with all builders, in my mind, and be prepared to know, and then find
the better ones anyhow.
Yeah, there's some great builders. So
Yes.
this is all with
Yes.
me speaking about the amazing builders that are out there. And I work with quite a few that do love the real estate agent, right? I know there's some that are trying to kick that person.
Not showing the love. And
Yeah,
there's going to be a
kicking that
payday
person
for
out.
that. Just for the record, there's going to be a payday for that.
Yeah, but work with those that do love, because I do think we're all one team, right? It takes everybody to get a client to the finish line. But we have our 9-month extended lock program that's free. Huge. So you lock on a 45-day price and you can extend it out to 9 months. And they put just good faith money down and it's fully refunded. That is a huge win right now. It's helping clients feel really comfortable. The thing that breaks my heart, and I'm seeing this today, a new construction folks where that lender that they're working with does not offer an extended lock. So they have to lock within a 90-day period. And they are calling me right now. What happens? What do I do? We just picked up one transaction to try to help. But keep in mind that interest rate went up from the day that they had the conversation, almost 2 points. I mean, that's just heartbreaking, right? So to talk about an interest rate today, to feel comfortable about a monthly payment today, to be sure to lock in, to know that you've got some wiggle room up to 9 months,
right.
That's a huge win. And you're going to say,
win.
what happens if it needs to be extended to 10 or 11? You and I would talk about that, saying the projected time frame is here, but maybe we need to already plan on some wiggle room. We can do that on the upfront. So that's key. But that's another program and product that we really are shining out there in the marketplace. But again, my job here is to bring products to the marketplace that will help you as a real estate agent open up many more doors so you can, serve many more. So our medical professional program, I get asked all the time, do you do those? Yes, we do. So
Wow.
I want you to be the one-stop shop kind of gal. New construction, land, anything you need, we've got you covered.
That's incredible.
I love what I do. So fun.
Well, thank you for thinking out of the box, Carey Ann. I really do appreciate it.
I can't wait to tell you what I'm working on. That's super cool. But we're not going to tell you yet until I get it passed. But
Awesome.
when I get it passed, you all are going to love me.
And people
Even
can reach
more.
you by...
Yes, you can always reach us 7 days a week at actually, we changed our number so we can help all states. Now, look at this. I got 877-456-4456.
Oh, wow.
How fun
Can
is
you
that?
dance to that now?
877-456-4456, because we now help, I think, 30 states now.
Holy cow.
So it's a huge
Wow.
win. So you got people moving in, moving out.
I know
We're
you
here
were
to help
helping,
you.
Sean was helping my son last week, and he presented to him the idea of the 25% down and let the property qualify for itself.
Yeah,
because
no
he
doubt.
hadn't paid himself on his new business for a while. So
It's opening up
great,
doors.
That's a
Yeah.
great tool as well.
Yeah, and you can always reach us at mymortgageteamapp.com. So thanks for having me on my own podcast.
We love you, Carey Ann. See you.
See ya. Thanks. You've been listening to The Talk of Music City Real Estate.